Okay, part two. Okay, so I have a question over here. So we have about 77 people over here now. Who does not have access to the Slack? Who does not have access to the Slack so far? Oh, Jason. All right. You guys should have gotten that link in like the same way you guys got the link to the thing. Where is it? Okay, I'm gonna put the link here in Zoom chat. There we go. I had to email the boot camp. Maybe like, check your spam folders. Because yeah, because if you check your spam, maybe there you're gonna get it. And I just posted the Slack link in the Zoom chat. So you can click this and you can basically join. Okay. Let's see here now. All right. Now we're gonna move over to some fun stuff here now. Fun stuff. We're gonna start with, okay, so we have more people coming in, so we're just gonna wait. We're gonna wait like five minutes. Oh wow, it's getting cloudy over here in Dubai. Looks like it's gonna rain. Yeah, got clouds. So you think about this place is you're not sure whether it's clouds or sandstorm. You don't know. Yeah, Dubai rain coming in. Yeah, okay, so I'm gonna make this announcement again. Who does not have access to Slack? I'm gonna paste the link right over here. We're gonna cross-reference all the emails. We're gonna cross-reference all the emails, so let's hope no one gets any smart ideas. Maybe we'll start raining money. Yeah, maybe start raining oil over here. All right. Let's move on to impulse entries here now, right? So we're gonna go into impulse entries. Yeah, so we're gonna go into impulse entries, and then next Friday we're gonna talk about risk management. Okay, let's take a look at this now. Impulse entries. Now, before we talk about impulse entries, I want to be very clear on what do we do when we wait for the candles to close, right? So whenever we're waiting for the candle to close, let's say prices coming down towards support, we're coming down towards support, right? And then a support is formed. This is what the basics of trading is, right? That you wait for the candle to close. Once the candle is closed, now you can say, okay, there's a high probability price can continue pushing up, right? So the higher probability may push price bullish. This is where we wait for the candle to close. But when we talk about impulse entries is when you're not waiting for the candle to close, when you're anticipating price to just continue pushing up. Now, psychologically, how this makes sense is that sometimes, like, we're told that we have to wait for the candle to close, and we're waiting for the candle to close, and price just continues moving, and we're waiting, and price keeps moving, and we're waiting and waiting. And as we're waiting, price goes to the point where we thought initially where price is going to go. And we're like, oh, fuck, I missed this trade. How could I have taken that entry? Now, before this whole thing started about impulse entries, before I even learned about impulse entries, I used to miss moves all the time because I was told I have to wait for the candle to close. And as I would wait for the candle to close, let's say that we didn't have this one, right? And as I would wait for the candle to close, this candle would move and move and move and move. And I'm like, oh, you know what? I missed the trade. So this happened once and then once because I can't do this properly. This happened once, then twice, then three times, then it happened four times. And I was like, wait a minute, this keeps happening to me. And I'm waiting for the candle to close. The candle keeps moving. What can I do at this point? Right? Because I was studying all the trades, I was studying all the moves that I was missing. And the point came where I was like, okay, you know what? Let me figure this out. Let me see what's something that I can kind of like, fix. So this is what I started to do. So I started to look at, now I'm like, okay, price just goes up and I missed move. I'm like, okay. So before we go into how I studied this first, let's talk about candle highs and candle lows, right? So let's say you have an uptrend, because everything that we do in the market, everything that we do in price action, everything is interconnected with each other. So we need to understand this, right? So let's talk about an uptrend. Whenever we have an uptrend, we've seen it on YouTube. It's a very simple, basic idea. In an uptrend, price moves up, comes down, moves up, comes down, and moves up, right? Which means we make a higher high, we make a higher low, we make a higher high, higher low, and essentially we make a higher high, right? And as we're making these higher highs, we're basically breaking above the previous high to make a new high, right? And then we make a low, and essentially, then we break above the previous high to go up to create a new high. This is what an uptrend basically is. Now, what does this mean when we look at the candles? Now, if you think that the candles are going to continue pushing up, candles are going to continue pushing up in a way where you're going to have a bullish candle. And if you think we're going to continue to move bullish, the next candle should make a higher high and a higher low. So this is the higher high, and this is the higher low that candles are making. This is very prevalent on the 30-minute time frame, on the 1 hour time frame. So whenever you see a candle creating a support on the 30-minute time frame, then you know that there's a higher probability for the next candle to continue making a higher low and a higher high, which is going to be this point right over here, because they're making higher highs and higher lows. And in this case, the new candle has to break above the previous high and respect the previous low. It has to happen. In the opposite scenario, let's say you have a candle coming up towards a resistance in a downtrend. We come up towards resistance, and then we create a bearish candle in a downtrend because price came down, came up, and now we form resistance. Now, when we form this resistance, we know price has to go down. And if we're going to go down, it has to create a lower low and a lower high, which will mean that if the next candle has to form, it has to respect the previous high and create a new low with a lower low. This is going to be lower low. It breaks below the previous low and just continues to push down. So in a downtrend, a candle has to respect the high of the previous candle and create a new low. In an uptrend, the new candle has to break the high of the previous candle and make a new high as long as it respects the previous low. That's it. So in an uptrend, we make higher highs, higher lows, higher highs, higher lows. When you break this down into candles, it's the same thing. Candles have to make higher highs and higher lows. So if I remove these arrows right over here, remove these arrows, and this is how it should hypothetically look like. New higher low and a higher high. So if we're looking at, bearish candles, it's kind of like the same thing. We continue to push down and we make lower lows. This is a lower low, lower high, and a lower low, right? This is what a trend is. Whenever you're taking a trade in a trend, it has to break the low of the previous candle and make a new low. This is how you know that price is now continuing in the direction where you think it should continue into. Now, when we talk about impulse entries are when we continue to make these lower lows and lower highs, but we don't stop. Candle continues to push down. So when I started to look at this, I was like, okay, wait a minute. Let me just draw this here again, right? You have a bearish candle forming right here, and you're thinking that, okay, I've traded, let's say, 50 times where I've taken sells off a resistance, right? Let's say, hypothetically speaking, let's say that Jason, right? Let's say uh, me, Jason, traded 50 times sells based off resistance, right? And out of those 50 times, 20 times you were profitable, and the rest 30 times you weren't sure because the candle just moved, right? So now you're at a scenario, you're like, okay, let me take a look at this bearish candle forming right over here. And as the new candle starts forming, there's high volume time, right? You have pre-London, London Open, or you have pre-New York, New York Open, and you're looking at this and you're thinking to yourself, man, the last 50 times that I traded sells off of a resistance, maybe, 10 times price has continued moving and I couldn't take an entry. Like I was watching price, I couldn't take an entry. So maybe what I can do is maybe I can take an impulse entry as we break below the low right over here, right? So as this new candle starts to break below the low, this is a bearish candle. As we start to break below the low, you're like, I'm going to take a sell because as long as this candle starts to respect the high of the previous candle, which means as long as it does not break the high of the previous candle and it starts to break the low, I'll take a sell in the anticipation that price should continue pushing down. This is the basics of impulse entry. This is when I saw this, I was like, okay, you know what? If I'm missing moves, right? And if price is going to move down, it has to break the low to create a new low logically. So if I take a sell as it starts to break the low, then I think I can have a pretty good shot at riding price further down because it's breaking the low to make a new lower low and then we can continue to push down. This was the basics of impulse entries that if I don't want to wait for the candle to close, and in the past, if I have waited for the candle to close and I've missed the move, so maybe this time I'm going to take an entry as we break below the previous low. Like, screw waiting for the candle to close. I'm just going to enter because I'm taking an impulse entry. But also remember, impulse entries are very, very risky with caps. Impulse entries are very, very risky because as you take an entry, this current candle, it can continue to push up. So whenever you're looking at impulse entries, you have to understand that you're gonna wait to see how candles are moving all the time because I sat and watched about like 50, 60 times of how impulse entries are moving before I even attempted to execute on them. On point 10-cent lot or a 1 cent lot. And then I decided, okay, maybe now's the good time to take on an impulse entry. What's this over here? Um, do you do this on 15-minute? No. This example is a normal entry. Yes. What should I do in a scenario when price doesn't make an opposite wick and breaks the low within 1 to 2 minutes of the candle? I usually let it go. Yeah, I usually let it go too. Right? So the question is that what to do when, okay, you have this candle right here. What to do when candle just comes down to break the low without making a top wick and then continues to push down. In the first 1 to 2 minutes, I just let it go. I don't do anything. I just let it go because like it's done. Oh yeah, it's a sandstorm over here. I thought it's gonna rain, but it's raining sand. Interesting. But could you not take entry at the open of the candle if the trend direction is the same and resistance has formed? Yes, you can do that as well. You can take an entry at this level. Okay, hold on. You can take an entry at this level as soon as it's formed, but we're not talking about that. We're only talking about impulse entries. Have also seen sometimes candle break the previous high, then come down to break the low. Yes, exactly. So we're going to go over that as well. Oh, you guys want to see the sandstorm? Let me show you. I'm not sure if you guys are going to be able to see this properly. So let the camera kind of like adjust to the light. Oh yeah, you guys can't see it. No. What if I zoom in over here? It's very foggy. Oh yeah, a little bit, right? You can't see the buildings up in the far. Yeah, it's pretty. It's coming from that side. That side is coming from. I thought it was gonna rain, but we got a full-on sandstorm here now. Got the first class seats. Okay, it's raining sand. Yep, it's raining sand. Okay. Didn't Canada have cleaner? You can open Sunday washing your cars now. Yeah. Uh, who cleans all the sand? Nobody. The wind. The wind just blows the sand up back in the sky. You know, and the sand comes right back down. Okay, right? So basics of impulse entries, when we're breaking below the low, you're taking an entry and anticipating price to continue to push down. Now, there are different scenarios that can happen. My favorite way to trade impulse entry, right? So we're going to talk about, we got some notes over here. So we're going to talk about my favorite way to trade impulse entries. This is my favorite way to trade impulse entries. And this is only when there's volume in the market. It's only when there's well, there's volume in the market and like when we have a very high volume session opening up. Holy shit. Anyway, when you have a very high volume session opening up. So let's say, for example, price is trending bullish. So let me get like a better color right here. So let's say price is trending bullish. We are moving up. We are moving up like this. And and then all of a sudden we are faced with a small candle like this. And the bearish candle forms like this. So this is what we got. You don't have to erase it like you do on a whiteboard. Yeah, that's correct. Right. So let's say we have candles that are moving bullish, and then you have a candle that formed, like a bearish candle with no wick on the top, with little to no wick on the top. This is my favorite way to trade impulse entries. If I see this, I am 100% taking this trade. And let me break this down here for you, right? Number one, you have a bearish candle, which has a wick at the bottom, right? And then you have no wick on the top. So this impulse entry, let's name this setup. It's a booby trap. Okay, booby trap entry. Let's call it the booby trap entry. Booby trap entry, right? Where you have a candle that closed bearish, which may signify that, oh, like, you know what? Now we have formed resistance to continue pushing down. This is what this may mean, right? That we may have formed a resistance to continue pushing down. But no, what I like to do is when you're looking at this bearish candle, the trend, SHOULD, should be, the trend should be there. Candle should have, let's do little to no wick. And there should be, there should be an exhaustion wick. There should be an exhaustion wick. That's what we want to see, right? So we have an exhaustion wick, which means that price has made a wick. There's no wick on the top. Now, when the next candle forms, it's very simple. When the next candle forms, all we expect to do is for the next candle to respect the low of the previous candle. And as it starts to break the high, this is where the entry goes for price to continue pushing up, right? So your entry goes right over here as you break the high of the previous candle. This is my most favorite setup. 30-minute time frame, 1 hour time frame, works amazingly well. Does the red candle have to respect the low of the previous blue candle? No. And no, it doesn't. It doesn't. Because when the new candle is forming, this is your trading candle. This trading candle has to respect the low of the previous candle. This one. Can you guys see the dot? Yeah, right? Okay. You guys can see the dot over there. Right? So it has to respect the low of the previous one, and it has to break the high. As it starts to break the high, I'm taking an entry for price to continue pushing up. Was this the same setup that you made 300K on? No, it wasn't that same setup. We're going to talk about those as well here later on. That was mainly Russia and Ukraine. Yeah, that was mainly Russia and Ukraine. This is my favorite setup to trade on impulse entry. First few minutes, it's a hit and a miss. Impulse entries are very risky. In the beginning, you will lose on impulse entries. So that's why whenever you trade on impulse entries, I would maybe say that on impulse entries, use 50% risk all the time. Always use 50% risk. 30-minute time frame, 1 hour time frames only. That's it. Haven't seen much of it in the last few months. That's correct. Yeah, just use 50% risk on all impulse entries. But this is my go-to setup. This one and what we talked about right over here. This one. This one right here and this one right here when we create a support for price to continue pushing up. That's what I do. 50% of your usual risk, that's correct. I believe using this specific setup on the beginning of learning impulse entry would be the most helpful. Yes. Also, you know what? There are different types of impulse entries you can do. There's another type, there is, which is, let's say we are in an uptrend and, you know, um, price is coming down. We are coming down some more. We are coming down some more, and we create some sort of a support. As the next candle breaks the high of the previous candle, I've seen a lot of people take impulse entries right over here. Please don't do that. You know, don't do that because there are different types of impulse entries and you have to focus on just one. So me in the beginning, I mostly focused on this one. That's it. This is the only one. Oh shit, you guys have to see this, man. This is getting crazy. This is getting crazier now. I'm gonna wait for it to kind of focus. Now you can't see anything. Yeah, wow. That's a lot of sand over there. Oof. Vortex trading platform. Yeah, you can't see shit. Sandman is coming. That's incredible. Yeah, I honestly thought it was gonna rain, but it's just sand. Yeah, crazy. Crazy times. Come to Dubai, Habibi, come to Dubai. Habibi, don't come to Dubai. There's sand everywhere. My friend is telling me Jumeirah is raining. Raining? Oh, interesting. Maybe it's gonna rain. Who knows? Okay. Maybe it will rain, maybe. Okay. Impulse entry. This one, don't do this. Just stick to just one form of impulse entries. That's gonna help you a lot. There's another setup that I've seen happen a lot, and let's discuss that right now. What's this? So in this example, okay. So any questions regarding this? So I know Paul is here. Paul's saying, so in this example, do not do this. Wait for the candle to close. Yes, exactly. Wait for the candle to close. Because the thing is, you're executing on impulse entries when you are unsure about a certain setup, right? When you are unsure about a certain setup, that's when you are using impulse entries. So for example, and also this way you also lose on some money as well. So for example, we're going to do a lot of examples over here. Oh, we got the blue color. Let's get the black one. So let's say price is coming down over here, right? And price is coming down. And let me show you how you're going to lose money here, even if price goes in your favor, right? Bearish candle, and then you have a bullish candle form like this. Now, and let's say the wick is big. Now, let's say that you're saying is that, okay, I'm going to take a buy when the next candle breaks above this high. Now, when the next candle breaks above this high, you're taking a buy at this point. So your buy is over here. What about all these pips that you're missing? All this movement that you're missing? Just because you're waiting for price to break above the wick, right? Are you not sure that we are in an uptrend? We retraced and, we retraced, we created support. Once we create support on a 30-minute time frame or a 1 hour time frame, that's it. There's a high probability price is going to continue pushing up. Then you don't have to wait for price to break above this high because you have to be confident. Impulse entries, when people take impulse entries in this scenario, I look at that and say, man, like maybe you weren't as confident at all. So if you're going to take an impulse entry as we break above the high of the previous candle in this scenario, just don't. Just don't even take an entry. Because if you're taking an entry right here, your stop loss is all the way down over here. It makes no sense at all. If you're going to take an entry, you have to be confident about it. And you have to say, okay, you know what? I'm not going to take an entry as we break above the high, but I'm going to take an entry just as soon as the candle starts. That's where I'm going to take an entry so that now I have a better opportunity for price to continue pushing up. And you have a better entry. So that's what I would advise at this point. What's this? Do you trade these regular doji instead of the exhaustion candle? Yeah, let me get to that over here. Is it a sell or buy the one you recommend? Is it a sell or buy on the one you recommend? Which one? Coach, what's the difference in the two? Which one? As long as we have the clean range to the left-hand side, there's volume, right? Yes, we need to have volume. The difference between this one and this one, you mean? There's a difference of night and day. It's the way the candles are forming. So if the candle is second 30-minute on the 1 hour close, execute on candle close, I execute on candle close. The first example with the red candle, didn't the bearish candle create resistance? I'm assuming price wasn't in range, so it wasn't uptrend. We already discussed about that, Jennifer. If it's in an uptrend, what did we learn over here? If we are in an uptrend, are we worried about resistance? No. If we're in an uptrend, we're worried about price retracing, create support, and then continue pushing up. When this happened, we did create some sort of a resistance, but as the next candle broke above the high, impulse entry went in for price to continue pushing up. Could you explain difference between the first and the last? Difference between number one and difference between number two? Okay, guys, now I know you guys have questions. Just calm down. No one ask any question. Let us go here one by one, okay? Let's just chill. Would you trade an impulse entry in an uptrend where it's just printing bullish candles? No, I'm not going to do that. And this is one mistake that people make all the time. Please don't ask any more questions until we're done with this. And this is one mistake that people make all the time is that when candles are pushing up, pushing up, and then they say, oh, okay. When the next candle starts to push up, they're like, all right, let me take a buy right over here. And you take a buy, and price goes up and then comes crashing down. How many times has this happened to you guys? This happens to you guys? That as price is printing bullish candles and you're like, okay, let me take a buy over here for price to move up. This happens a lot of times, you know? And the reason why it happens because look at it this way. You had one 30-minute candle move bullish. You had the second 30-minute candle move bullish. Now you're expecting the third 30-minute candle move bullish. If in some way the third 30-minute candle does move bullish, then you're expecting the fourth candle to move bullish. How does this make sense? You know, what we talked about yesterday was that this is a note-taking time. The best buy trade is always from support or near it, right? And same way, the best sell trade is always from resistance. You have to make notes or near it. Very, very, very important. You know, these two sentences are going to stop you from taking trades as candles are moving bullish. And also it's going to stop you from taking sells as candles are moving bearish. This is the number one way you're going to lose. That you see two candles move bullish or three candles move bullish, and then you're going to take an impulse entry expecting the third or fourth one to continue up. No, because as you're taking a buy, let's say up over here, where's your support? Your support is all the way down over here. You're nowhere near support. This means you're in the middle of a range and you're trying to take a buy. I'm getting a bit confused in this current scenario. How is it an impulse entry even though the candle closed in our favor, creating support in an uptrend? Okay, I'm going to talk about just that. So one sec. So in your favorite impulse setup where it formed the bearish candle, the risk is instead it pull continue further. Yep, that's true. Okay, okay. How do you draw support within the Vixar bodies? Yeah, we're gonna go over that. So now, confusion. I know there is some confusion over here. Okay, so the confusion is in this example right here. Man, if you guys have an iPad, you guys don't use this iPad for this, wow, this is just so amazing. Okay, so this is what we were talking about here, right? There's some things falling from the building. Okay, anyway, right? Okay, so since we have a support formed, now the question is, when you have a support form, you have to trust price action, right? You got support form, you're looking at support, and that. Oh, I thought it wasn't being recorded, but it's being recorded. Okay, perfect. I stopped and I'm like, wait a minute, is it being recorded? Okay, so whenever we have a support form, you should have enough confidence to say, okay, you know what? I'm going to take a buy as the new candle starts for price to move up. Perfect. Now, the reason why impulse entry is not good in this scenario is because you have this wick, and ideally what you're saying is that if the next candle breaks above this high, you're going to take an impulse entry. So essentially, you're missing out on this move up. So you're losing some pips over here. That's why it is not recommended to take impulse entries that way. Should we expect retracement after the third 30-minute candle? Yeah, if the retracement happens, it happens. We don't know. But if a retracement happens after the third 30-minute candle, then that means we're going to create support to go up, right? Who was this? SBM, even though closing is not going to create support, yeah, SBM. So there's a difference between executing on the candle close and executing as an impulse entry. Two very different things. Impulse entry is when you're not sure and you're waiting for that extra confirmation. Candle close is when you are 100% sure and you're executing at candle close. Should we expect retracement? So entry should have been after liquidity wick move up. That's another thing, right? So we're going to talk about that entry on next week when we talk about risk. Perfect examples on gold buys, yes, post NFP. Yes, that's correct. Right? So let's talk about the opposite one. What's this over here? I remember when you explained the way you used to trade when price was forming resistance and you would take a sell before candle close and price would go against you. I used to do that. Yeah. Yeah, I used to do that as well. I would anticipate price to come down, but whatever. Okay. All right, let's take a look at this right here. There are a lot of things that we're taking a look at right here. Let's say that we are trending bearish, right? We're trending bearish, we're trending bearish, and then all of a sudden we have a bullish candle forming like this, which means we have a support form because we have been coming down. And when we have a support form, this means that there's a high probability for price to move up, create resistance right here, and then continue pushing down, right? That's what we're anticipating at this point, for price to create resistance and then continue pushing down. But what if we don't create resistance, and instead of creating resistance, we wick up, respect this previous high, break the low of the previous candle at this point right here, and continue pushing down? This is your impulse entry for price to continue pushing down. This is your impulse entry. Booby trap sell. Exactly. This is a booby trap sell candle. Also, there are some limitations as well. In this, let's say booby trap impulse entries. We're going to call this, right? Booby trap impulse entries. This is going to be the name of this from now on. Booby trap impulse entries. Price has to trend. There should be a trend. And the impulse entry candle form, it should have little to no wick. That's what it should have. Little to no wick, right? If, for example, okay, we have bearish candle, we have bearish over here, we have bearish over here. If, for example, let's say this is a bullish candle and it has a wick like this, then it's not an impulse entry. It's not an impulse entry. Then at that point, I'm waiting for the next candle to close bearish, and then I'm taking the sell on the next candle to continue pushing down, right? Or I'm waiting for price to, um, or I'm waiting for price to retrace, create resistance, and then pushing down. Something is not clear. You said once a bullish candle doesn't have a wick below it, there's probability it's going up. Yes, I did say that, right? So now we're moving back to this example right over here, right? I did say that. You're absolutely correct. That when a bullish candle forms, this means that there's a higher probability it can continue to move up. But what are the conditions that it can continue to move up? The condition is that the next candle has to break this high and respect this low to continue pushing up, right? So whenever we talk about price is going to push up, that means candles are going to make higher highs and higher lows, what we talked about right here, which means that the candles are going to respect the lows of the previous candle right here to continue pushing up, okay? And you're absolutely right. Candle close with no wick. But what can we do when the next candle starts to break the low? If we start to break the low, then there's a higher probability based on what I've seen in the market that price will continue pushing down. Look how crazy this is. In 10 minutes, the sandstorm came and the sandstorm went away. It's back to being clear now, right? It's all good. It's all good in the hood. I'd rather live with a sandstorm than a snowstorm. Just saying. Uh, this is worth the price of the camp. Oh, what's this over here? But the body is weak. That's true. So if there is little to no liquidity wick, we can execute. Yes. If there's little to no liquidity wick, yes, exactly. So all you got to do at this point, you have to literally wait for candles to print in a way that you have seen before and you can recognize. That's all what you're doing at this point. You're waiting for candles to print in a way that you've recognized before. But you said not to wait for the break of the previous high to not lose on pips. In this example, you would have gotten into buys and stopped out, then done impulse sell booby trap. Who's taking a buy over here, brother? Like, are you even listening? This is a downtrend over here. This is a downtrend. Why are you taking a buy in a downtrend? You're not taking a buy in a downtrend. In a downtrend, you're waiting for a resistance to form and then price to continue pushing down. That's what you're doing. You're waiting in a downtrend for resistance to form for price to moving down. But this is an impulse entry happening. What can we do when candles can print this way? Are you going to call the market, hey, why are you printing this way, man? I thought we're going to move up to create resistance. The market's going to say, no, see ya. We're going to move down. Right? We're not talking about that. We're only talking about, impulse entries at this point. You're bringing something in that's irrelevant to what we're talking about right here. Do you look at the lower time frame? No, I don't. I don't know how many times I've heard you say that. Oh, hope these setups start happening again towards yes. Right? So we're not taking a buy as we break above the high. We're just waiting for price to break the low for it to continue pushing down. That's all what we're doing at this point. That's it. Impulse entry. And there shouldn't be any wick at this point. Now we're moving to another one. This is another scenario. If there's a wick over here, I think what's going to help is if you guys go over the recording like 2 or 3 times of like specific sections that we talk about. Now if there's a wick, then if the next candle starts to break the low, I'm not interested in this impulse entry sell. That's just me. That's just me. I've tried it and I've lost and I gave up and I'm like, okay, you know what? My rule is very simple. I'm just going to wait for candle to close. If there's no wick like this, I'm going to take an impulse entry. If there's a wick, I'm not going to take an impulse entry. I'm going to wait for the next candle to close and then I'm going to decide what I'm going to do after that. Impulse entry always after the first half of the 30-minute candle. I'm not going to talk about first half, second half. Visually, this is what I want to see. Downtrend, support created with small body, no lower wick. Yes, Robert, that's absolutely correct. Just simple rule. Just simple visualize this thing in your mind and ingrain it that, okay, if I see this, I'm going to take a sell if such and such things happen, and that's all what I'm going to do. And that's what I do, basically. That's all what I do. When I see this, automatically my brain goes, oh, okay, sell time. I take a sell. If I see, something like this happened, like this, I'm like, okay, time to take a buy, and I just take a buy. Right? Okay. Now, we discussed two scenarios of impulse entries. One was for a buy, and the other one was for a sell. That's it. That's all what you're doing at this point, right? This is when you're taking an impulse entry going with the trend. If price is trending down, you're taking an impulse entry. If price is trending up, you're taking an impulse entry. That's it. We're not talking about anything else. Just this. Are there any questions related to um, number one and number two? Let me bring this number one down there so it's clear. All right, this is fun. Oh, no way. That's cool. Perfect. Right? Any questions regarding two and one? Only two and one. I've been looking for these moves. I've always seemed to miss them. Is there a way to anticipate when they might happen? Yeah, like whenever you see something like this happen, just do a paper trade, to see if it works. The more paper trades you do, the more dummy trades you do on a setup you're trying to learn, the more confident you're going to get over time. Can you show more example of the impulses you won't take? Yes, we're getting to that now. So on the booby type of impulse entry, you only risk 50%. I used to risk 50%, but I would encourage you guys to risk 50%. But I risk I risk my regular percentage on these because I've seen them happen a lot of times. Okay. One thing that I would not execute on, any other cases to watch for when there's no wicks? Nope. These impulse entries are on 15-minute, nope. 30-minute and 1 hour, 30-minute or 1 hour, 30-minute and 1 hour. Boy. Okay, so let's take a look at this, right? Let's say we have resistance here. On this impulse entry type, it seems you cannot reduce risk. We're going to talk about that tomorrow. No, next week. Okay, so let's say we have um, I lose my train of thought. Okay, let's say we have resistance, right? And candle comes up towards resistance, and this resistance has formed. Now, taking a buy as the next candle breaks above this high, is that allowed or not allowed? It's situational. And the way it's situational is like this. Let's say you had a bearish candle, and you had the bullish candle that moved up and broke above the resistance. Then it's I would say there's still a probability that the next candle, once it breaks above the high, there's a high probability we can continue to push up, right? There's a case where it gets tricky is when you have a bullish candle, you have a bullish candle, and now you're trying to take an impulse entry as we start to break the high. This is no, right? And then this one is yes. You can do that right over here. So let me do this again. This one. Okay. Let's say we have resistance, and let's say we had a bearish candle forming. And after the bearish candle, we have a bullish candle that forms like this. Now, when the next candle starts to break the high, this is a better impulse entry buy right here than this one to the left-hand side. The reason why is because the one on the left-hand side, we're going to call this A and we'll call this B, right? In A, it's not good because we already have one candle moving up, two candle moving up, and now you're anticipating the next one, the third one to move up, right? But in B, you had resistance right here. One candle broke out, and now when the next one starts to break above the high, you're like, okay, there's a high probability we can continue pushing up, right? B formed support. Yeah, you're right. We formed support. But the idea is that whenever you're taking a buy, you're either taking a buy right at support or you're taking a buy on the next second candle, anticipating it to continue pushing up, right? So now I want you guys to really concentrate, right? I want you guys to really concentrate and look at this really, really carefully, okay? I'm going to slow it down as much as I can. You have a support over here, okay? Now you have a candle closing bullish. These are all 30-minute time frame. 30-minute, this is also 30-minute. You have a support right here and a candle closes bullish. You're like, okay, candle has formed support. We formed bullish. Let's take a buy as the next candle opens or whatever, and you're anticipating it to continue pushing up. Perfect. In this case right here, we have candle closing bearish, and now you have the candle closing bullish, but it breaks above this resistance. Now you're looking at an impulse entry for price to go up. Also noticing that we formed support at this point, so there's a high probability for the next second candle to continue pushing up. You see the difference, right? You're doing the impulse entry on exhibit B, we'll call this C, right? You're doing an impulse entry on exhibit B. As we break above resistance and break and close after we form support. And on the C, you're taking a trade as the candle closes at support. I tried to break this down as simply as possible. Stop loss, William, we're going to talk about on Friday. But for starters, your stops go below the previous candles. If you think the stop is too big, then it's going to go below the one lower time frame. So buy on B at candle close is too risky. Yes. Yes, it's too risky. And the reason why it's risky is because the next candle can essentially just continue pushing down. That's why it's risky. So B and C are different scenarios. Oh, absolutely. They're different scenarios. In C, the price is uptrend. In B, price is finished consolidation. Yes. B could be sell if price goes below the wick of bear candle. Yeah, but we're not talking about that. For A, should we wait for some type of a retest? Yes. For A, you're waiting for a retest. So on EMP entry, the previous candle closing bearish is not in play. What EMP entry? EMP? I don't know what that means. EMP entry. No idea what that means, Paul. I'm lost. Impulse. Oh, so an impulse entry, the previous candle closing bearish is not in play? No. So on breakouts, only impulse entries. On breakouts, only impulse entries. I would still say if you're going to go for impulse entries on breakouts, just watch them play out maybe 15, 20 times to kind of like gauge how well they can move. Because it's very important for you to gauge how well they can move. Impulse entry must always follow the trend. Yes. So for simplicity, I can't stress this enough. For simplicity, so far, just focus on this and focus on this. That's it. For simplicity in the beginning, just focus on these two. There's no other thing you got to focus on. Because now we're going to talk about something different. Booby trap setup for 2 months. Perfect, Sultan. Perfect. Booby trap setup for 2 months. That's it. And 2 months also is not enough because it may only happen, once or twice a month. For A, could the wick of the candle be a retest? No, you need a market structure retest. How many candles does it take to form a trend? There's no such thing as how many candles it takes to form a trend. There's no such thing like that. Yeah, there's no such thing as how many candles it takes to form a trend. A trend is basically where you expect price to go. Yeah. So let's talk about counter trend trades, right? Counter trend. So we've talked about counter trending trades. We all know about that. Trending trades. We're going to talk about counter trend trades. Interesting stuff. These are very risky. We're just going to talk about them just because to, some information, maybe someone may find them useful. Okay. Oh, what's this? Oh, wow, very thick. This one? Still thick. We're going to stick to this one. Okay, counter trend trades. Let's say we are moving bearish. Price moves bearish. Price moves bearish. And then we have a bullish candle form. And since now we have a bullish candle formed, which means we're creating some sort of a support, right? We're creating some support and price starts to move up to create resistance for price to move down. And then what happens is that instead of creating resistance up over here, we start to create a bearish candle right here. So is this a good sell opportunity if we have volume in the market and there's momentum? Yep. What? Oh, no, wrong. Right? Because there's no range. There's no range, right? There's absolutely no range. So what has happened is there's no such thing as it might be a good opportunity. That's not how price works. It's either there is or there's not. It can't be there's might be or there's maybe is. No, there's no such thing as maybe. It's always, it's yes or no. It's a sell, no. So maybe, like we're creating a resistance right here, right? And now this isn't enough range for price to continue pushing down. So what happens? We start to consolidate, right? This is the perfect consolidation when there is no range. So how many times have you guys seen this setup that we come down, we create a low, and then we start to range, right? We start to range at this point. So we start to range, we're ranging, whatever, we're ranging over here, right? A counter trend is going to be, there are two types of counter trend, right? The first one is when a candle closes above resistance. Now, I want you guys to focus. Let's let some oxygen go through all our nerves and brains, and I need you all to focus now. Right now, look at this scenario right here. I want you guys to look at this scenario. Let me change this color to yellow. Right? look at this scenario and then look at this scenario that we looked at here earlier on. Let me remove this and let's get back to this. So, and like, take a look at this right here. This one, and then we're looking at this one down over here. Isn't it almost like the same, right? Like you had resistance and this candle is closing above that resistance. So this is a perfect opportunity for an impulse entry. No, not an impulse entry. Sorry, forget I said that. This is an perfect opportunity for a counter trend trade because initially the trend was bearish. We created resistance, and now we're breaking and closing above this resistance. So there's a good opportunity for price to continue pushing back up. This is a counter trend opportunity. Counter trend move. Counter trend happens just like this, a break of structure for price to continue pushing the opposite way because we have clean range to the left hand side. This is a counter trend trade. Breaking minor resistance, absolutely correct. So this counter trend opportunity, you would enter as a candle closes above resistance. You're absolutely right. If it closes above resistance, absolutely right. Can it be called reversals? Yes, absolutely right. You, my friends, are absolutely correct. Uh, right? Could you mark the entry point? Yeah. Entry point is buy. Right here. Right here is your entry point for price to move up. This is the first example of counter trend. First example, right? So any issues so far on this first example? No ifs. What if this? What if that? We're not going to talk about that. When we draw our resistance, should we take the whole wick into account, rough body? Not the whole wick, but it's just the body. It's just the body. So you never enter on breakout after candle close. I just said that. So this is different. So this is different than B. Nope, it's the same. It's the same. Look at this. It's the same. Look. Look at this candle. Number one, right? And all right, maybe we're missing a bullish candle right over here, right? And this is candle number one. And then you have candle number two. You have candle number two. Then you have candle number three. Then you have candle number three. Then you have, well, yeah. And then you have the buy over here, and then you have the buy over here. Right there. Right? It's the same, but entry is different. See, the candle formations are almost the same, but the entry scenarios are different. I don't expect you to get this in the first go. You have to maybe watch it, experience it, play around with it. Setup is same, but entry is different. Absolutely correct. Now, let's talk about the second type, the second type of counter trend. The second type of counter trend is now let's say that we're moving bullish, right? Enough with the sell. We're moving up, moving up, moving up. Let's say we move up once more, and then you have a bearish candle forming like this, and you have another bearish candle forming, and then you have a bullish candle form right over here. So we formed some resistance, bullish and bearish right over here, right? See this one now? So if the next candle starts to break above the high, that's your impulse entry. Make sense? Your impulse entry for a counter trend once it starts to break the high. So this is very practical to this example number one, right here. This one. Makes sense? And there are only these scenarios that are going to happen. Right here, and we're looking at this point at this point. Your camera is gone because the battery died. Hmm, too bad, so sad. The battery died. That's why the camera is gone. So, right? Makes sense? Because this one scenario is the same as this scenario at this point. But the only thing that's going to be different is, let's say, for example, now there's another variation to this, and that variation is when you have a wick right over here, right? What do you do? Do you take an impulse entry? So if you have a wick right over here, do you take an impulse entry if the next candle breaks the high, or do you wait for the candle to close? If everyone can truly understand that, I'm going to be like, oh, wow, man, you guys are awesome. Yes, you wait. You wait for the candle to close. You wait for the candle to close, and then you take your trade for a counter trend trade. Awesome. We're doing great. Um, let's see over here. I have another battery. Impulse entry not valid due to wick. Yes, that's correct. Whenever you have wicks, it's going to be very difficult for you to do any sort of impulse entries. Whenever you have like some sort of wicks. Let's see here. Okay. If wick is under the resistance, then you can enter an impulse entry, correct? No. Then you're still waiting for the candle to close above the resistance. Then you're still waiting for the candle to close above resistance, even if the wick is at that point. Let's say we have like this and another one that goes like this, and you have a bullish candle form and whatever. And then even if you have a wick below resistance, you're still waiting for the candle to close above the range for it to go up. It's just more serious and interactive and seeing you on the side. Thank you. Yeah, I don't know how long this battery is gonna last. I forgot to charge it at night. Let's put this other one on charge. Can you take an impulse entry and manage risk if price goes against you? Yes, we'll talk about risk next week. Counter trend trade, but in this uptrend, I thought we're supposed to look for sell. Yes, you're supposed to look for sell. If we, what? Counter trend trade, but in this uptrend, I thought we're supposed to look for sell. Oh, yes, very good point. Very, very, very good point. Looks like someone was paying attention. All right. So let me just okay, let's do this. Very, very good point. So initially in an uptrend, we look for supports to form, right? And this is where if we have to wait for price to break below the low, yeah, you're absolutely correct. Counter trend. You're absolutely correct. How would two be a counter trend if it was bullish trend, then range, then bullish? Yeah, we fucked up. So this is supposed to break below this resistance for a counter trend. For you, Raja, in this case of counter trend, would you take the impulse entry or entry as the candle starts? I'm going to take, let's say, in this example, let's talk about this example right here. In this example, I would say maybe I would wait for price to, you know, maybe print below this area to be able to take a sell for price to continue pushing down. That's what I would want to see. Would you say better to take less risk in counter trend trade? Yes. It's always better to take less risk in a counter trend trade all the time. Personally, Raja, how many positions would you open in an impulse entry? One. Just one position. Just one position. We're going to talk about risk next week, and we're also going to talk about how many positions to open and stuff like that. Even with dynamic risk, yes. Even with dynamic risk. Counter trade means trading against the trend, yes. For number two, as price was pushing up, the fourth bullish candle, if it had a large wick, would the impulse be invalid and instead we wait for the candle to close for a buy? So if this one that you're saying had a large wick, yes, then you would still, no, then you could still do that. This doesn't really matter. This just means that it's mainly a wick fill as price continues in that direction. But we're not going to talk about what if scenarios because there are like infinite amount of what if scenarios. Okay, good. So let's do something different. So this note, okay, we're just gonna save this one. So I want to move towards um, my account that we did, and we're gonna go over some trades that I took. So you guys can look at the trades, and then we can go over those trades, and then we're gonna move into a simulation session, and then we're gonna call it a day here today. All right. Um, okay, so let's do. How do I do this? How do I do this? Why sometimes you check the 1 minute time frame? You've done it in Dubai boot camp, but I missed to ask. No, I never checked out the 1 minute time frame. Maybe I switch over to the 1 minute for some reason, but I never. Oh yeah, it did rain. It didn't rain on this side, but it rained on the other side. Hmm. Okay, so let's go over to here. All right, how do we do this? Close this, close this. Open up my Dominion Markets. Stop share. Let's see. Host disabled participant screen share. Who's the host? Oh, it's me. All right. Come on, man. Okay, so let's do this for example, and uh, Okay. Can you guys see my screen? Yeah, okay. Perfect. Yes, you guys can see my screen. Let's see here. All right, so let's zoom in into um I don't even remember what account that was. This account number was 6209118. 6209118. Is this the right password? Oh yeah, this is the right password. Okay, perfect. Um, history. Let's go over here. Okay, there we go. There we go. And we're gonna move into entire history. All right. Can we see example or two of big trend wins so we can identify them too? Yeah. So let's do the profit like this, right? So the biggest win on this one was 2.5 lot. This was a gold buy. This was around pre-London to London Open. So let's plot this. What's the easiest way that I can drag it here and it just takes me to that price? Or I'll have to scroll it over and over again. I guess we'll have to do this, right? We have no choice. So yeah, 20th December. It's gonna take some time. Go with time, scroll on high time frame, so it comes in order like month. Oh, okay. There we go. 20th December. Trade history. 20th December, and here we are. 20th December. It was this trade right over here. Maybe if you drag and drop trade on the screen, it takes directly. No, it doesn't. Okay, so this was a buy. This was a 2.5 lot buy, made about 100 pips on it. The 30-minute candles, this was strictly taken off of the 30-minute time frame. We were coming down from a support area, right? We were coming down from a support area. We broke above this resistance. Now notice how once this candle closed bullish, there wasn't enough range for me to take a buy because the resistance was right here to the left hand side. Now notice I'm not doing resistance all the way up to the wicks. I'm just doing it to the bodies, just like this, 1 to 2 pip. 1 to 2 pip zone, and that's about it. Whatever. 1 to 2 pip zone. So when this candle closed bullish, I didn't take a buy because the range was like 13 pips, whatever. Even after we broke above the high, this was like a 12 to a 20 pip range. So I waited for candle to close above. So we closed above right over here, and the next candle went up. And now at this time, we had pre-London time. After pre-London, I wanted to see that, okay, can we create some sort of a support or we can create some sort of a retest for price to continue pushing up? Because if we look to the left-hand side, looking to the left-hand side, we had all this clean range where price could continue to keep on moving because we were coming into pre-London London Open. Also, there was a lot of news going on about uh, Russia, Ukraine at this point. So I mean, I don't think there was Russia, Ukraine at this point, but there was still volume at that point. So price formed a bearish candle as the next candle, broke above the high. A buy was taken and price continued to push up. That's the candle you take entry. Don't have bottom wick. You're not always waiting for the bottom wick first, sir. No. Now, let me circle back because there's a difference at this point, right? And the difference is that, look, this candle, it didn't make a lower wick. That's no problem. But as this candle started to break the high, I'm thinking about that, okay, if we're going to go up, we have to make a higher high and continue pushing up, right? So as we broke above the high, I was like, okay, if we broke above the high, then there's no business for price to come down to create a low for price to continue to push up or whatever. You know, so my stop loss was at 1793.35, right over here, right below this wick. As we broke above the high, I put my stop below this current candle that if we did break the high with volume, we should continue to push up. And as the next candle, then, you know, we broke above the high and continue to push up. And as we were about to close bearish, I closed out the whole trade. Is the bearish candle considered a retest? Which one? This one? Yes. What made you keep holding? Because it was like a small account. I've already made, you know, 30,000 at this point. So I was like, okay, you know what? I'm just gonna let it go. Like if I do lose, I'm probably gonna lose like $400, something like that. Did the resistance to the left bother you? No, because there was volume in the market. Because as this candle closed, once this bigger candle broke above the high, then, you know, to the left-hand side, we had clean range. Guys, listen, resistances and the wicks to the left-hand side, it shouldn't bother you because there's volume in the market. You have to trust the volume in the market to continue pushing price. Yeah. So I closed. And then as you can see, price came down, created support, and you know, we broke above the high. If you know impulse entries, this is a 50 pip range for price to continue pushing up. What about the wick on the bearish candle? Which wick on which bearish candle? So let's say you hadn't made any profit, so well, I guess we'll never know. This one? Yeah, like as we broke the high and then my stop was down over here. This wick at this point, I don't know, like I really believed that I could take a risk. And that's about it. Risk was like 4%, 1% risk at that point. If I lost, I would have lost maybe less than 1% because I apply risk management techniques. So, I mean, wasn't really bothered about it. But wouldn't we close, but wouldn't we close above? I thought a booby impulse entry would mean no wick. Yes. But the more you see it, the more comfortable you get, the more inclined you get in taking extra risk. I think because the wick is smaller than the red candle, it's okay with volume. Yes. But it's all about how confident you get when you're taking impulse entries. As the candle close above the next candle would be good buys. Yes. Right here. This one. This one right here. Entry. Boom. Move up because this candle didn't close with no wick in the bottom. Before that, no. I think because, yeah. So let's take a look at something smaller, like let's take a look at maybe what time was that taken? Pre-London London Open. What time frame should we apply SNR on? 30 minute and 1 hour. 30 minute and 1 hour. That's the best way. So let's take a look at this one right here. This was a sell on gold around 19th October. 19th October. Right? 19th October. Oh, there were multiple sells over here. All right, what was this over here? 19th October, right? Which one was it? This one, 19th October, pre-London time, 06. Oh yeah, right? Almost like the same entry. Almost like the same entry. So doing analysis, we had support to the left-hand side. See this candle? This candle broke below the previous candle, right? Something we talked about, broke below the previous candle. I missed this entry, and then I took an entry on the next candle we had, it was like a very, very risky. So don't judge me on this. This was extremely risky. I shouldn't have taken this at all. It was very risky. But I still took the trade and made about, how much did I make? 244. But then this candle broke below the support, and then this candle formed, did a retest right here, did a retest. Look at this wick. This is a 9 pip wick, and this is a 5 pip body. What did we talk about yesterday? Whenever the wick is bigger than the body, this means exhaustion candle. So when this next candle broke below the low, entry went there, and the stop was right over there, like 13, 14 pips right there. 16, yeah, 1641, and then I placed my stop at break even, and then price went down, and yeah. So it's almost like the same scenario, almost like the same scenario of the one we just talked about. And there was a lot of problems here to the left-hand side, so I closed right over there. Am I right to say 4 hour for bias and 30-minute and 1 hour to trade? Yes. 6:52 is 1:52 a.m. Eastern. I think so. I'll have to count, you know, I'll have to count. But it's 6 hours, 6.5 hours after, market open. So that's what, like five, like 6, 7, 8, 9, 10, 11. It's before pre-London. Even after exhaustion, wick trend seems to continue downwards. Yes, that's correct. Right here, we broke below the low and continues to move down. MetaTrader uses Moscow time zone. Yes. C-Trader, you can change time zones in C-Trader, on C-Trader. But Dominion Markets, we have a different time zone. C-Trade is much better, yeah. True. Oh, look at this monster camera over here. This is actually very heavy. C-Trader is coming out soon. We passed KYC for C-Trader, so I think it's going to be done maybe by this month. We should have C-Trader functional. Third trade was a risky trade. Yes. Let's take a look at some losses. Perfect. Let's take a look at some losses over here. All right, let's take a look at, surprisingly, my losses aren't that big. I think this was news over here. How do you use ruler on C-Trade to count pips? Same, the middle mouse button. Looking back at this challenge, some of the timestamps threw me off since some trades were taken before pre-London. Yes, some trades were taken before pre-London because the more I was looking at pre-London, I started to realize that sometimes there was a shift in volume, and volume shifted, and volume came before pre-London. That's what I realized. The more you look at, this is why what we talked about yesterday is that it's really important to focus on just one session, because the more you focus on one session, sometimes you're going to see that the volume shifts a little bit. Maybe sometimes it shifts before that session or shifts after that session. It kind of like shifts at that time. Best session for gold, pre-London and London Open. All right, let's take a look at some loss over here. First, let's take a look at this biggest loss I had. $129. We formed resistance, but we did not create a top wick. You still took a sell. This is the exact same trade, but in a buy that we talked about before this example. Almost the exact same trade we talked about. The size of the account was this. This was a $5,000 account. I built it to, let's take a look at this. SRC MyFX book. So what was this? This was October. And in October, it was October. Yeah, it was about like 10,000, 8, 9,000 in October. Okay, let's take a look at this loss over here. This was on 16th November. 16th November, this loss. Oh, wow. God damn. Oh, oh yeah. Yes. 16th. Oh yeah, this one over here. I don't know what the hell happened over here. Was this Russia and Ukraine? This has to be Russia and Ukraine. Wow, crazy. 16th November. 16th November. Right here. Here we go. What the hell happened? Okay, so annoying. All right, so this was at 12:48, 12:48, right here. Okay, so this was a buy I took for some reason. Why did I take this buy? This was no, this was a sell. Yeah, screw this scale fix. 12:30, 0.75 lot. So this was 0.75 lot. This was a sell. Oh, I took a sell down over here. Yeah, I took a sell down over here. I realized that this was not a good trade for me to take. So I closed it. Let's take a look at this on the 15-minute time frame. Looking at the 15-minute time frame, I took a sell. Now look, there was one bearish candle, second bearish candle, then a third bearish candle. Now don't judge me on the 15-minute time frame. I was just being stupid at this point, right? So I took a sell as the candle broke below the low, anticipating it to continue pushing down, and I basically took a loss. Even looking at the 30-minute time frame, it yeah, it just didn't make any sense, but I managed risk. Yeah. That was a sell at that point. That was a bad trade. I think I won the trade over here before, so I wanted to risk a little bit more and kind of see if I can win again. But it didn't. My bias was right, but the trade idea and the timing was wrong. Even if we look at it from like a support perspective, let's say we have a support form, 30-minute candle close below this area. I think I took a sell a little too late. If I would have taken a sell as soon as the candle started, trusting the volume to push down, I think I would have been profitable, right? You guys get it? Because we were in an uptrend and we create resistance, right? We create support. This candle closed below the support. And then this was the entry candle for price to move down. But for some reason, I waited a little bit too long and I took a sell down over here and I paid the price, because I would have taken the sell as closer to this area as possible. Can you explain buy in the left before you took the loss on the sell? This buy on the left-hand side, yeah. Let me go over to the 1 hour time frame. Oh, hell. Okay, so this was on the 16th November. Let's go to 16th November. 16th November, right here. So this buy was, yeah, I remember this buy, right? So this was right here. We have a resistance forming on the 1 hour time frame. So remember how we talked about a setup in our chart? You guys remember that we have a bearish candle, next candle moves up, and the one after that breaks above the high. You have some range at 40 pip range over here, took a buy and price moved up. let me 16th November. Yeah, that's what I'm looking at there, William. My stop loss, so this was a 1.5. Stop loss was 1778. I think 1776. I think it should have been based off of the 15-minute time frame, right? 30 minute. Let's take a look at the 30 minute and take a look at the 15-minute. 77. Yeah, it was based off of the 15-minute time frame. So kind of, yes, 15-minute time frame right there. Because based off of the 1 hour time frame and even on the 30-minute time frame, this would have been a bigger stop loss over there. So I based it off of the 15-minute time frame. Whenever someone says Raja is scam, when then his trades matches exactly what he teaches. Exactly, right? My trades match exactly what I teach. So how can like like my trades aren't some random trades I take, They're not random trades. Like trades actually make sense. The same scenario, the bearish candle, if no wick, would have been a booby trap the other way. Yes. Absolutely correct, Blake. Absolutely correct. One thing that's obvious from your trades is you always use a stop loss. Yes. Um, Big love and respect. Thank you, bro. Appreciate it. So let's take a look at another one. What's a good benchmark profit per month? I would say, okay, what did I do on this one? Uh, I'd say like 18% is a good benchmark. 10% is a really good. Like this account was too small. So I think I was risking a lot. So I did like, 91, 100%, 94%. But I think a good benchmark would be 10 to 15%. And the one you lost, price still went in your direction. Yes. A decent win is going to be like 20 pips, 25 pips. That's going to be a pretty decent win, I would say. 15, 20 pips. So let's take a look at one more trade and then we're going to end the Zoom. I'm going to let the thing buffer and then we're going to come back for a simulation. All right, let's take a look at this over here. So uh, what should we look at? Let's take a look at some pound yen. Like most of them were just gold trades. Like pound yen trades were just some of them. Let's take a look at 0.5, 20 pips. Yeah, let's take a look at this one right here. This was a 0.5. Yeah, let's take a look at this one here. This was 18th October, pound yen. 18th October. Round and round. Am I right to say aim less big pips lot sizes? Depends on how many less pips are we talking about. If it's less than 10, don't do it. 18th October, and here we are, 18th October. Boom. All right. 18th October. Oh, this was I secured some over and over again. All right, perfect. So 5-5. This is also at like around before pre-London. So we created resistance, right? We created resistance right here, and this candle closed above resistance. The next candle went up. So maybe I was looking for price to create some sort of a support to continue pushing up. But instead, what happened was that once this bearish candle formed, the next candle broke below the low. I took a sell in a fake out. Yeah, I took a sell at that point for a potential fake out, secured one position over here and secured the rest. Yeah, secured one position right here and secured the rest one at this point right here, 0.5. So I took two positions. Were these two positions? Yeah, these are two positions. Two positions I took. One was a one lot and one was a zero point 0.5. Let's take a look at this on the 15-minute time frame. Oh, no way. Now we have to go all the way back again. October 18th, October. Yeah, 15 minute kind of, the 30 minute made much more sense. 15 minute was very off here at this point. I think the 30 minute made much more sense there. So that was sort of like a fake out trade where trade comes back in the range. Pretty good. Went pretty good. Did the full withdrawal, and we basically chopped this withdrawal into three $10,000 accounts, and we basically just gave them away to people. That's what we did. We just gave them away to people. But anyway, so I'm gonna end the Zoom here, and then I'm gonna end the Zoom here, and then we're gonna be back after this kind of does its whole thing. It kind of like buffers, and then we're gonna come back for the simulation. Oh, it looks like my battery died over here as well again for the mic, the camera. Okay, so we're gonna see you guys back in about 10, 10, 15 minutes. 10, 15 minutes. We're gonna circle right back. Same link though. Same Zoom link. Oh, if anyone does not have the link to Slack, this is the link right here. Join this one. All right, cool. We'll see you.